Our guest speaker today has had a front row seat to how companies navigate risk, build momentum, and scale into global leaders. Today, I'm so pleased to be joined by Randy Garg, our 2025 inductee to the BC Innovators Hall of Fame of Vistara Growth, who's going to tell us about his journey. So, without further ado, I'm going to let Randy introduce himself a little bit. So a sort of twofold question for you, Randy, if you don't mind. Would you start by telling us a little bit about your personal career arc, and then we'll learn a little bit more about Vistara and what you actually do. But first, let's hear about you personally.
Sure. Thanks for having me on, Joe. Appreciate all you guys are doing at BC Tech to support the local tech community. I've been in British Columbia since 1991, so 35 years now, and been in the tech universe for about 33 of those years. So a third of a century is as daunting as that sounds. I'll try to summarize it, the 33 years. So really, the first kind of 12 to 14 years has been focused on venture capital. Coming out of grad school at UBC, I started with a venture capital firm focused on early stage venture equity investing, Discovery Capital. They're not around anymore really, but some of the companies we funded back then would have been Sierra Wireless, ALI Technologies, Avigilon. So some of the ones that have now spawned other really interesting companies in the local community. So that was my kind of foray on the early stage side of things, which I guess covers much of the audience here today. The last 15 years, though, I've been really focused more on growth stage companies.
Yeah.
We'll get more into what Vistara does specifically, but companies that are a bit further along. So there's proven product market fit. They're now looking to really expand what they're doing. They're building out their teams. So they need different types of partners, different types of capital to accomplish what they want to accomplish. So back in 2010, I started a family office fund for a very large real estate family here in town, the BD Group, as many of the audience probably knows. Ran that for 5 years, and then in 2015 spun out to create Vistara. So I'm also a startup founder, which I started 10 years ago. And fast forward to today, we've got 15 people on the team, half in Toronto, half in British Columbia. We've raised 5 funds, close to $1 billion through various sources of capital. We're about to launch our latest fund later in the year, which should then dramatically increase the size of capital that we have available to follow the strategy that we're following.
Fantastic. Okay, so you're one of our $1 billion people, though not personally a billionaire yet.
Hopefully, one day.
Excellent. Okay, so that gives us a really clear sense. You've worked in capital your entire time, some in early, more recently in growth stage. Tell us a bit more about Vistara, because it's not a typical fund. I think it's helpful for people to understand where you play.
Yeah, and I think this theme will come up again later, but we've really been successful filling gaps in the market. So going back to my early venture days, realized that capital takes different shapes and forms, and different types of capital are relevant and applicable at different stages of a company's evolution. So when starting BD Capital back in 2010 and then Vistara Growth now back in 2015, really the gap that I saw in the market was between traditional sources of debt capital on one end, i.e. the banks, and traditional sources of equity capital on the other end, which would be the venture capital firms, growth equity firms, and the like. So as a founder, as an entrepreneur, you may be at a certain point in your evolution where you don't want to dilute, or you don't want to price your equity, or you have more of a non-permanent need, more of a shorter term need. So we come at it more from a debt standpoint. We're careful about that because these companies aren't profitable typically. So we're banking on the value of the company and the fact that our capital can help enhance that value during the course of our relationship with that company. So this isn't short-term kind of bridging or receivables financing or shred financing. There's other types of firms that do that. So we're usually committing to companies for 3 to 5 years. It'll take the form of a friendly type of debt with warrants or convertible debt where we look to convert into equity at some point in time. But it's always, some of our companies call it rental equity effectively because it fills a need for a certain point in time. And for that flexibility, for that commitment, we do want to participate in the upside. So that's been the strategy really for the last 15 years. So we've invested in over 45 companies on that basis as Vistara. We've had over 25 exits already in the portfolio. Proud to say we've never lost a penny on a single deal. So it's different. Again, our model is different than traditional equity. So we can say that and we can actually deliver on that.
Wow, that would make you extremely popular with investors. And a,
Thankfully,
right?
we have a very loyal following. So
Fantastic. And a great name to have on your capital table. Okay. So let's think. Um, Obviously, you're not making all of your investments in BC. There wouldn't be enough companies. So I know you're seeing things right across North America. But what perspective does that then give you on this place that we both call home? What do you see that's strong here or what's less strong?
yeah, I kind of go back to when we started and even back at the family office. We were doing a lot more in British Columbia. So for additional context, our companies are typically doing anywhere from 10 million in revenue on the low end up to 100 million in revenue on the higher end. On average, they might be in sort of that 20 to 30 million dollar range. So back when we started, and our funds, albeit were smaller, we were probably doing half of our activity in Canada and a good chunk of that within BC, leveraging our networks and everything else. Fast forward to today, I have to admit that that percentage is more like 10 to 20% of what we do, right? So I think the observation that I've seen is we have a lot of companies at that earlier stage, sort of that 0 to 10 million in revenue. Um, we have a few anchors, which obviously everyone knows about, but the middle is where I think there's a big gap in the market. And there's various reasons for that, which we can get into. But that's probably the biggest observation that I would have is that, companies either don't get past even the 5 million mark or they get to the 10 million mark. And then how do you scale beyond that? And what are the sources of capital? What are the sources of talent to help you scale beyond that level? And I know BC Tech's trying to do more and more in that area, and I'd love to work with you and find out more about those companies because either we're not doing our job in finding those companies or they don't exist. I'm guessing it's more the former than the latter, but there's probably some combination.
Fantastic. Well, we'll take that challenge seriously and try and bring you some exciting companies that you might be able to invest in BC.
Yeah,
So Kim will take note of that for our C councils and for the rest of this year.
I'd
Um,
love to.
yeah, it would be because it would really be great to make some of those connections. I often find that companies in that scale are just so focused on customers and growth that they're not always as active in the ecosystem as they could be, and they might be missing opportunities. So
Yeah, I think just to build on that point quickly, there's also a growing understanding amongst venture investors, boards, CFOs, CEOs, that there are other types of capital out there. I came from the VC world, so I know the alphabet soup of venture capital, as I call it, the Series A through whatever. But there's different types of capital along the way. So I think people are appreciating that you can maybe look at debt or convertible debt or to help delay that equity round or avoid it altogether as part of the path.
that's great. And I know that, I mean, you need to focus in a very disciplined way on your business and what you're going to be investing in. But one of the real assets that we have in this ecosystem is people like you who are prepared to give of their advice and share their wisdom. And even if it's not an investment that you're going to make out of your funds, I'm sure you'd be willing to talk to highly ambitious companies at this stage and explore what the alternatives might be for them, at least provide a bit of education.
Yeah, and we track and try to engage with companies. It's hard to engage with ones that are at the really, really early stage just because we're not as relevant. But once they're hitting about 5, 6 million in revenue and there's a path towards getting north of 10 million, we'd love to engage with those companies before they get there. We used US 10 million as our minimum, but for the purposes of this audience, we'll call it Canadian 10 million.
There's a discount for you.
40% off. PC Tech members. There you go.
Fantastic. Okay. So yeah, we're seeing great strength in the early stage, some really great standout success, but not as many scale ups and in as much volume, and certainly not as much as we're capable of. I totally agree with that. Um, when you think about the companies that you are investing in, share with us what that sort of success profile looks like. Do you see are there patterns? Are there specific sectors that you're most interested in, or are there specific things about the management of the company? What is the pattern that you see when you do make an investment?
Yeah, so we focus primarily on B2B companies. We don't invest in consumer tech. Um, the nature of our investor base, the nature of our funds, we promise them three things. We promise them security, we promise them yield, and then we promise them upside. Right. So focusing on the security aspect of it first, these companies need to be resilient companies. Again, they don't need to be profitable from the get-go, but we're not looking at companies that have massive burn rates that have to raise the next round of venture capital. They effectively use our capital to become profitable or self-sustaining or whatever the case might be. So the underlying business itself needs to be very sustainable. The unit economics need to make sense. The gross margins need to make sense. All the typical SaaS metrics around retention need to make sense. Within that, we've developed certain expertise in areas, and we have team members dedicated to certain areas. So financial services technologies is a key area for us. So companies that sell software to banks, insurance companies, wealth management, and the like. Extremely long sales cycle, but once you're in, it tends to be very, very sticky. Similarly, we've been doing a lot more work in healthcare IT. The US healthcare system in particular is very, very fragmented and broken. Desperate need for advanced technology. In a lot of cases, it's more tech-enabled services versus just pure software. But we've got somebody on our team dedicated towards that, for example. Cybersecurity is another big one for us. We've done a lot of deals in cyber. So I think coming at it more from a vertical expertise has helped us in market. So when we're looking at these companies, to go back to your question, it's really that defensibility is very, very important to us. And then once you've covered that, then it's okay, how can you participate in the upside? How can you help accelerate the growth of these companies along the way?
Great. So defensibility and acceleration.
Yes.
The key themes. Okay. Well, let's talk a little bit about the hot topics of the moment, AI, but all the other buzz that you're hearing about. What are the trends that you're noticing? What are the things that you're paying a lot of attention to? What are the things that you think are overhyped?
Yeah, it really is all AI, frankly, right now.
Yeah.
I think within certain verticals, you're seeing a pickup in interest. Areas like defense, for example, you're seeing a lot of interest. But just building on that whole defensibility and acceleration, that is actually how we look at all of our companies in the context of AI as well. So we've developed a bit of a methodology around how we view AI and how we view the impact on our companies. So uh, the hype around AI is going to replace all software, SaaS apocalypse, all software companies are dead, I think is way overblown. When we look at it across our portfolio and the companies that we're tracking, you really got to distinguish. It's kind of like the iceberg. You have the stuff above the waterline that you see. So the coding, the user interface, the basic workflow stuff. That's kind of table stakes. It's the stuff below the water level. So the deep integrations, the data compliance, the regulatory side of things, just the level of institutional trust that's been developed between the customer and the software provider. Yeah, and don't underestimate old-fashioned things like customer support and switching costs. And yeah, a lot of these companies are experimenting. Big customers are experimenting with AI, but they're not ripping out their core systems and replacing them with AI typically, right? So, um, So that's on the defensibility side where we're really kind of honing in on that. And then it's okay, how can these companies accelerate? Can they launch new products more quickly? Can their unit economics improve? We have a lot of our portfolio companies that are realizing that they can build a lot more with a lot fewer people, and getting products out to market in a matter of weeks and months as opposed to quarters and years. Um, so that all of that kind of plays into how we look at companies. So the hype around AI, I think there certainly is some hype around AI, but it's also having a real impact on how we look at investments, how other investors look at investments, and on the companies themselves.
Yeah, and in a very practical and applied way, as you say, it changes the situation. It doesn't change everything, but it changes a lot of things. So,
Yeah.
okay, let's switch gears again and think about those different stages of companies from the very early stages to starting to grow and then really getting to the growth stage that you're interested in. What are the kinds of positive changes that you see leaders in those companies have to sort of master, or what are the behaviors that make the biggest difference? Because there's a huge difference between starting up and scaling up. From the point of view of working with those that have successfully done it, is
Yeah.
anything, any common messages you would share?
Yeah, I think there's there's been a lot more discipline in the founder groups that certainly that we deal with. And I think generally speaking, maybe outside of certain pockets in Silicon Valley or certain pockets that are really living this AI hype cycle that we're in, uh, people are starting to understand and realize what gross margin is, what profitability is, having sustainable businesses with decent unit economics. So, those days where you can just keep raising money every 18 months, double the valuation and clean terms, those are gone. Those just aren't happening with maybe a few exceptions. So I think given that discipline, that sets up companies, that sets up investors for success in a far better way. So you're way less likely to be caught flat-footed or down to your last month or two of capital, and then you're desperate and pleading for a lifeline or something like that. So I think that is permeated now. People have gotten through a cycle where there's been a massive correction and valuations aren't automatically double what you did last time. You got to prove it. You got to show growth. And now you've got this other powerful force called AI that's come in where you have to defend to people like me and others as to why your company will continue to exist and hopefully thrive going forward. So to me, that's the biggest thing is just that discipline that's come into the market around how founders are looking at their businesses. We look at lots of pitches now, and before it was all about upside and blue sky and whatever. Um, there's a lot more focus now on why we will continue to exist, why we're resilient, why we deserve your attention, kind of thing.
That's great to hear because that it's like anything in life. I think having that discipline, you can always bring the optimism and the excitement and the ambition and be super determined to change the world, but having your feet firmly on the ground and being able to express in a very disciplined way what you're doing with other people's money is key.
Yeah,
Uh,
and obviously there's a little bit of bias, I guess, as more of a credit oriented investor. So maybe we're self-selecting those companies that are coming to us. I think if a founder is going to a VC that's looking for a 10x, 20x, 50x change the world type story, then we don't see those companies anymore. So maybe that's a better pitch for that audience, but that falls on dead ears for this audience at least.
well, we did promise frank feedback. Thank you for living up to the
Yeah.
promise. Okay, thinking about this new world, because really everything is changing, and that is intimidating. It's scary for everyone, even people in the tech sector. But there's opportunities every time there's threats. Every time there's a platform shift, there's an opportunity for new entrants. Actually, it can be an opportunity, even if you don't have a as strong and healthy a middle as you'd like to have to use this to change that. So when we think about BC and BC's ecosystem, is there anything that you are seeing elsewhere in the world or elsewhere in North America, perhaps, that you think we could learn from, that you think is something that if Canada really took it to heart, we could be benefiting more than we are today?
Yeah, I think so for sure. I think there's a ton of opportunity in a number of different areas. One of the frameworks that I've thought about and looked at, because I get asked this question, sat on a couple of roundtables, more national, federal, like what do we do to get more competitive and this and that. So one of the frameworks I really like is the one that Jensen Huang from NVIDIA has put out. So this 5-layer cake of AI. And you've seen this, no doubt. So like if you just look at each of the layers for a second, starting at the bottom, you've got energy, right? So energy is needed to power all this stuff that we're looking at doing. We have a massive advantage in Canada around this, and in BC in particular, across Canada. I think if you look at developing technologies and working in areas around creation, extraction, transmission, storage, these are AI aside, we're as population grows and everything else, we just need to be better with energy and clean energy and all of that. So like that fundamental layer of the cake, as it were, I think is an area that we can really succeed in Canada and in British Columbia. Um, the next layer is the chips, right? So a lot of that has been taken over by the U.S., by China, by other big players, Taiwan and the like. But I remember back in the 90s, we had some great chip companies here in BC, the PMC Sierras and the Broadcoms and the like that were, pumping out engineers, and we are doing a lot of great creative stuff in chips. I'll freely admit that I've lost track of how we're doing in that sector, but there's a lot there. There's a lot more that could be done in the area of chips. So there's another opportunity set that I think BC could really go after. Uh, then you've got the infrastructure layer, so the data centers and all that. We have an abundance of land. We have an abundance of a lot of things in Canada. Should we be, we're a colder climate where we're a good place for these data centers, right? Lower energy costs, etc. Don't get me started on tax and government and all that. But if we can get that fixed, then I think we can be a very, very, near shore, onshore place where these data centers should be and could be developed and serving not only our own population, but even that south of the border. The next layer is the models. I think that game is probably not something where Canada or BC should necessarily focus. There's hundreds of thousands of models out there, mostly open source. The big ones that we all know about that are all going to probably go public in the next little while, they're US companies, Chinese companies. I think we have Cohere is probably the only one of any relevance and scale in Canada. That game's probably done. So I would maybe focus on that layer. And then at the very top, it's applications, right? So that's where historically we've seen some really, really interesting companies develop out of British Columbia. If you think about Clio and Jane and the like, you've got companies that are focused on certain verticals or certain use cases that can develop these amazing application companies. So there's still tremendous opportunity there. So, if you think about applications, if you think about infrastructure, chips, and energy, I really want to hone in on energy because I think that is something where BC can really shine if we can drive some innovation around that.
Yeah, it's a great call to action and a really I do love that framework and thinking of it in that way. It takes us away from that buzzy approach to
Yeah,
AI that's just blah blah blah, and takes us to what are the fundamental building blocks here and where can we play, where can we win, and where should we be focusing our time and energy?
yeah.
I really do love that, and
It's no different than the picks and shovels kind of thing that everyone uses with whenever there's a gold rush or whatever it is. Canada's always been good at that. BC can, I think, be good at that. So
I
that's where I
agree. It
focus.
is. It is slightly less glamorous than being a gold miner, but
Hmm.
possibly more profitable.
Yeah.
So we will stick with that.
I don't know. There's a lot of gold miners with a lot of money around town these days. So.
But yeah, you got to pick your lane and pick something that you've got competitive advantage in and a plausible story for how you're going to scale. It's no different for a country or a province than it is for a company. But then place some bets, right? Because I think that's the biggest concern that I have right now, whether it's what I see with our member base or what I see with some of my government partners is people are just a little bit paralyzed out of the fear of the unknown and the fear of the scale of change. And so they're tending not to act rather than acting. And these are the times when you have to act with confidence, with discipline, with your feet on the ground, but you have to act.
Yeah, we have to place bets. I've got two teenage daughters who ask me, what should we do? What are we going to do when we grow up, kind of thing. And it's not an easy question to answer, right? We
Yeah.
need to have a thriving economy here to keep people like my daughters here. Otherwise, they're going to leave. They're going to go wherever the opportunities are. And we're seeing that in BC with our students coming out of universities, with our employees in the tech sector, even with capital. Like we invest 80% of the dollars that we get into the US market. So why aren't we investing more here in Canada? We need the opportunities to invest in there. So we need to place bets and not to be too blunt about it, but we need to be making decisions that last longer than a 4-year election cycle.
Mhm.
People need to make decisions that are going to benefit BC and Canada for the longer term.
Yeah, yeah. Well, sometimes I like to say it's almost like a war or a big national challenge. People will one day look back on this time and ask us what we did, what
Mm-hmm.
decisions did we make, and what steps did we take to take advantage of this huge opportunity. But you're right, there is opportunity, and if we don't participate, others will participate, and we will lose out. So, but I liked your positive 5-layer cake with at least 4 layers where we can actively participate. So, uh,
Totally.
let's return to the question of you as an investor and what you've seen. I'd love it if you could share with us just a little bit around management teams. So a lot of people on the call are at the stage where they're starting to think about growing and scaling. Perhaps, once upon a time it was you and a small group of people doing everything. Now you're moving in a direction of growing the team and involving more delegation. Is there anything that you've seen people do very successfully, or any traps that you would encourage them to avoid stepping into?
Yeah, I think a lot of it right now is about assembling the skill sets. We've being a tech investor for the last 30 plus years, the tech part of the team has always been the focus, building the best tech and having, a very deep, robust set of managers around tech and whatnot. Some of that actually is less relevant now. It's more kind of about product and product management. It's go-to-market teams, it's customer success teams, very strong finance, legal teams. As,
Mhm.
transactions are increasing in volume. So I think the makeup is maybe a bit different than what you've historically seen as the CTO and the head of R&D and the various kind of R&D compartments within an organization. So the makeup has probably changed a bit in this new world that we're living in. And then the other thing is just the companies should, from an early point in time, really look to surround themselves with good advisors, good board members. Um, we worked with all kinds of founders over the years. Over 33 years, I've worked with all kinds. I'm not naming names or anything like that, but founders who kind of like to surround themselves with board members and advisors that they can take advice from, all the way to folks that look at the board and advisors as a nuisance and don't want to deal with them and just want to do their own thing. So, you got to find your cadence somewhere in the middle, probably. You are the founder, you're the entrepreneur, you're going to drive the vision. People will need to get in line, but you need to also understand your weaknesses and try to surround yourself with people that can help fill those gaps in, and not just from people that are giving you money. In many cases, they may not have the best advice because they have their own vested interests at heart. So really from an early stage, surrounding yourself with the right board members, advisors, and all that. And think about your org structure. You don't need as many people as you used to.
Yeah, that's true. You're really helping to answer one of the questions I'm seeing in the chat. So I'll just read it to you. So we're growing fast, but that suddenly means we have to make way more decisions every day. With so many competing priorities, how can we prioritize where we spend our time?
Well, welcome to the world of running a company. no one, no one signs up for this as an easy job, right? So you just, I don't know if I have a, I don't want to give a clever answer. I don't know if I really have an answer, frankly. It's just part of the deal.
I think that's really, yeah, I think that's the right answer. It's sort of, I think people have a false belief that coming up with the idea is the easy bit or the difficult bit, and that then scaling that idea will somehow be easy, and things should be easy, and they shouldn't be easy. That's what you get money for. So
Mhm.
they're difficult, and that is so it's actually can be a sign of success if you're getting to the stage where you've got more questions, more decisions to make. You're having to move in lots of different directions. That can be a sign that you're growing in the right kind of way. So embrace it. But yeah, you do need to surround yourself with the team and with advisors that can help you cope with all of
And the beauty we find, at least in our businesses, is there's a lot of tools that help, get rid of the administrative stuff that you used to waste time on, and whether there's note-taking tools or other collaborative tools, it's great. There's hours every day that I didn't have before that I have now.
Yeah.
And whether
Yeah.
you use that on the business or whether you use that to improve your personal life, that's kind of up to you. Right?
Very true. Okay, so here's a difficult question. So this is another one. I'm not sure the answer to this, but let me share it anyway. If a company's growth has suddenly flattened, what's the first place you think we should look to figure out what's going on? It's quite hard to tell what's causing it, and I don't know if I'm looking in the right places.
So I think you have to look at it two parts of it. If your growth is flattened because you're not gaining new customers, then you probably need to look at your product and your customer acquisition strategy. If your overall growth is flattened because you've got a leaky bucket where you're losing customers and you're just desperately trying to onboard new customers to fill the difference, then your value prop is probably not great if you're losing. So you need to. So this kind of goes to your retention. Is it a gross retention problem and you can't keep your customers? That's a huge problem. So that's a major red flag to investors when if your gross retention stats are dropping kind of below the 80% mark. That's a huge red flag for investors. So, but if you're keeping your customers and your customers are happy and you're just not growing, maybe you're in the wrong market. Maybe you need to look at adjacent markets. We look at companies all the time where the growth has been going well and it's sort of stalled out a bit.
Mhm.
Where maybe the answer is M&A, where you're going out and acquiring adjacent products because you've maybe saturated a bit of your own market. But if you had other products that you could bring into the mix to sell to those same customers, that might help improve your growth rate. And it's a great market to go out and acquire competitors, by the way, because a lot of them aren't raising capital and exits have slowed down. So some of these deals can get done on pretty attractive terms. So a number of deals that financings that we look at are actually to fund an M&A type of strategy.
That's really helpful. Thank you. So another question. So Randy mentioned helping companies to grow and accelerate their success after he invests in them. So what practically do you help the companies with in this regard? And then a second question, in the case of a sole founder or co-founders, is there one that you prefer when it comes to investing? So, practically, what do you do to accelerate? And do you care? Do you have an opinion about solo or co-founders?
Yeah, so depending on who you get your capital from, uh, they're going to have different levels of involvement in what you're doing. So if you're going down more the private equity, growth equity route, they tend to come to the table with these playbooks that they've used with other companies, and it's really hands-on and big teams and all that sort of stuff. If you're talking about more of a minority investor, such as what we are, and particularly as maybe more of a credit investor initially, maybe we'll convert into equity at some point, but we're still a minority provider of capital. Then it's okay, where can you add value? How do you stay in your lane? Uh, we'll be a board member or an observer. So for us, it's really about customer introductions, um, looking at how the team should be built, adding new board members. If there's a financing going on or an acquisition going on, lending that expertise. So yeah, every investor thinks that they're value add. Maybe they are, maybe they're not. I've been on both sides, so I can tell you they're often not. But I think knowing your role and knowing what you're good at and where you can add value is key, and not overstepping that. So it kind of depends what stage you're at too. If you need a lot of advice and a lot of help and introductions and that, or if you're where we get involved, the companies, they're doing 10, 20, 30 plus million in revenue. There's a board, there's enough customers. So really for them, it's about how do we expand? How do we do it efficiently? How do we keep on our trajectory? So that's where we try to help from our standpoint. And I forgot the second.
The second question was, do you have an opinion about solo founders or co-founders is the one you prefer?
Uh, Tough one. I think de our we've had decent experiences on both, and even in co-founder situations, there still tends to be one dominant founder, and that person's usually him or her is usually the CEO at the end of the day. So most of the companies that we're involved with, there are co-founders, but there's still one dominant person involved.
Okay.
We've also been in situations where there have been co-founders, and one of the founders is no longer active in the business. So we've actually provided the capital to buy out the prior founder, because it's really uh, that leader that's going to take it forward.
Great. Okay, I've got another question for you. So, for a small company, so not one that's at the stage that you would normally invest in, but they've got steady growth. Are there other places they can go for the kind of financing options you're talking about, or what kind of flexible capital would you recommend to them if they're not quite at your stage, but they are steady and profitable?
Yeah. No, there's definitely smaller versions of us that exist on both sides of the border. So right, whoever it is can certainly reach out to me and can provide a couple of referrals if that's something that's of interest. Yeah, our market tends to bifurcate really between the $1 to $10 million check providers and the 50 million plus check providers, and we live in the middle, sort of the 10 to 50 million. That's the range of investment that we make in each company. And we have good relationships with folks it's a bit of a food chain. We have good relationships with the folks at the earlier end that we send deals to. And then when the companies grow further, we can step in. And then the big boys, all the household names that you hear about, where they take us out of deals or they'll send us deals where it's not quite big enough yet for them.
Okay. Well, that's really helpful actually, because I think it really emphasizes that point that don't hesitate to reach out. And use your network, use organizations like BC Tech that can connect you to people. Don't hesitate to ask. Nobody minds saying no, or I can't help you, but I know someone who can. It really is
Absolutely.
fine.
Absolutely. We've had, this is a long, for investors like ourselves, I guess, it's a long game. We've had companies that we looked at 10 years ago that are now, much larger companies where we're re-engaging, or even that those executives or entrepreneurs have moved on and done something else. They remember, yeah, he provided that introduction to so and so, and it helped their trajectory, and now they're in a different company, and I think this one's a better fit for you. So it's, we don't do it to get a favor down the road, but it kind of happens to be that way many times.
Yeah, I think yeah, it's a really positive message of there will be a solution. You just need to ask and explore until you find it. And we're happy to help.
Yeah.
Okay, so listen, that is all I have in terms of questions from our audience, but I do have one final question for you, Randy. As I said, we've got lots of startups on the phone today, and it can be an intimidating task to sort of stay motivated and excited and determined and positive and optimistic, but disciplined and with your feet on the ground. What words of support and encouragement would you give to BC startups to encourage us to build that healthy middle?
That's a big question. Um, yeah, I come at it as effectively a startup founder myself, starting Vistara 10 years ago. And first thing is figure out if there really is an opportunity. So figure out, in our case, there's a gap in the financing market that we felt existed. Um, we had we had true conviction around it, and we went for it. We found supporters that we were able to convince or also believe that that existed, and then just a dogged determination to execute and deliver. Also, I think putting your own money where your mouth is important. We're big investors in our own funds as well, so we can credibly go out, and if nothing else, you're investing your own money as well, so it creates motivation to to get up every morning and find new interesting deals or help the ones that you're already in, or whatever the case is. So it's really just trying to get, and it's not easy. I'm not by any means suggesting it's easy, and obviously we have that kind of the whole COVID thing in the middle, and there's days where you get up and you don't feel like it, and maybe you want to check out, but I'd say just stick with it, keep that conviction, and but really keep stress testing to yourself. What problem am I solving, and is it really a relevant problem to keep solving?
Fantastic advice. Thank you so much. Thank you for being so generous with your time. We really appreciate it. And it's wonderful to have people like you in our ecosystem. We gotta tap you on the shoulder more, get you more involved in our VC tech work.
Anytime, anytime. I People ask me, why are you based in BC? It's because I like living here. So I would love to do more deals here. Certainly, if you're a company that is looking for growth capital where we can help, I'd love to have a discussion. And if we can't help, certainly happy to point you in the right direction. And yeah, we'd love to see BC have more kind of companies that are emerging as leaders, and that's the only way you're going to get more anchors in this town.
Exactly. Okay. Thank you so much, Randy. I really, really appreciate it. Thank you to our audience. Thank you for joining us today.